Have you ever been right about the market?
Watched price do exactly what you predicted and still lost money in options? This isn't bad luck. It's a misunderstanding of what you're actually trading. Options are not just a one-dimensional bet on market direction. And once you understand this, you'll never trade options the same way again. Subscribe for the professional edge. Master market structure with me.
Have you ever been so sure about a stock's direction, watched it do exactly what you predicted, and somehow still lost money on your options trade? If you're nodding your head right now, you've stumbled right into a trap that gets so many retail traders. Well, today, we're going to expose that trap and, more importantly, show you how the pros sidestep it completely.
This right here is the trap in action. On the left, the stock did exactly what you wanted it to do. But on the right, your account balance is telling a totally different and, frankly, a really painful story. Now, this isn't just a string of bad luck. It's the result of a fundamental misunderstanding of what you're actually trading.
You know, for most people, the logic seems so simple. If I buy a call option and the stock price goes up, I make money. It feels like this clean, simple equation. The problem is, that equation is dangerously incomplete. It's a one-dimensional belief that's being applied to a multi-dimensional product, and it is the single biggest reason why your wins can feel exactly like losses.
So, if getting the direction right isn't the whole story, what is? Well, we need to talk about the hidden killers. These invisible forces that are constantly, and I mean constantly, working against your simple directional bet. Let's break them down, one by one.
This slide really frames the core problem perfectly. You see, trading a stock is kind of like climbing a ladder. It's pretty much a one-dimensional bet on price. It's either up or down. But options? Oh, they are a completely different animal. It's not a ladder. It's more like the cockpit of a fighter jet with multiple moving parts, and direction? That's just one of the gauges.
All right, let's meet our first and maybe the most relentless hidden killer, time decay, which the pros call Theta. Think of it this way. When you buy an option, you don't actually own time. You're just renting it. And the rent is due, without fail, every single day.
And let's be clear, this isn't something that might happen. It's a certainty of the market. It's like watching ice melt on a hot sidewalk. The value of your option is just constantly, unstoppably decaying. Time itself is actively working against your trade.
So how does this silent tax actually work? Well, as you can see from this curve, the decay isn't a straight line. Oh no, it accelerates, kind of like a car speeding up as it gets closer and closer to a cliff. The nearer you are to expiration, the faster your options value just bleeds out. So from the very moment you buy, you are in a race against the clock.
The second killer is where things get really frustrating. This is where you can be perfectly right on direction and still get totally wiped out. It's called the volatility crush. This is all about a factor called implied volatility, or IV, which is really just the market's expectation of a big move that's already baked into the option's price.
This line, it says it all, doesn't it? You absolutely nailed the stock's move, but you completely missed the other, equally important trade that was happening right under the surface, the trade on uncertainty itself.
Think of high IV as paying a huge premium because of uncertainty. Before a big event like an earnings report, nobody knows what's going to happen, so uncertainty is maxed out and options are super expensive. But the moment that news drops, whether it's good or bad, all that uncertainty just vanishes. IB collapses or crushes. And this acts like a massive hidden exit fee. And it can be so severe that it completely erases any gains you thought you made from the stock's price move.
All right, our third killer is probably the most deceptive of them all, the Greek illusion. This is where delta, your option sensitivity to the stock's price, and gamma, the rate of change of that sensitivity, basically team up against you. They are the reason why being almost right so often feels exactly like being dead wrong.
Think of delta as the gas pedal of your trade, but gamma is like a turbocharger that kicks in when you least expect it. As you get really close to expiration, gamma can go into absolute overdrive, making your options value hypersensitive. And if the stock doesn't move far enough or fast enough, that turbo boost works in reverse, and your profits can vanish in an instant.
And finally, we have the invisible costs. These are the structural headwinds that are literally baked into the market itself. These are the small cuts that can cause a trade to bleed out before it even has a chance to get started.
This is just the harsh truth of it. The moment you enter an options trade, the very structure of the market puts you at an immediate disadvantage. So your trade has to somehow climb out of this hole just to get back to break even.
So these headwinds, they start with the bid-ask spread, that gap between what someone is willing to pay and what someone is willing to sell for. You buy at their high price and you sell at their low price, creating an instant paper loss right off the bat. Then you add in a little slippage and commissions, and you quickly realize you're starting every single race several steps behind the starting line.
So, if the deck is so clearly stacked against the simple directional buyer, how in the world do professionals win? Well, it all comes down to a complete shift in mindset, from betting on direction to strategically managing structure.
This table really lays out two completely different universes of trading. On one side, you've got the retail approach, buying direction, chasing momentum, and basically just hoping for the best. And on the other side, you've got the professionals' game. They often sell the very things that kill retail traders, like time and volatility. But the most critical difference, the one that separates a sustainable career from a blown-up account, is that last one: how you size your positions.
A study of traders found that those who size their positions based on conviction, that gut feeling that says this is the one, they have a staggering 74% account explosion rate. Let that sink in. They don't just lose a little bit, they go to zero. They blow up not from just having bad trades, but from having big trades that were sized with emotion instead of math.
And this gets us right to the core truth of it all. Professionals don't see options as lottery tickets for betting on direction. They see them for what they were actually designed to be: sophisticated tools for transferring and managing risk across an entire portfolio.
So, how do you make this critical shift? It starts with a winning reframe, a totally new mental model that puts you in control by helping you align with the forces of the market instead of constantly fighting against them.
It is time to toss out that old, flawed formula of right direction equals profit and replace it with something that actually works. What does the checklist for a professional, durable options trade really look like?
This is the pro checklist. Before any trade, they ask themselves, 1, okay, what's my directional view? 2, what's my time frame for this to happen? 3, is the volatility for this move cheap or expensive right now? And only after answering those 3 questions do they move to the final crucial step. Number 4, what is the right structure that gives me the best mathematical edge here?
And that, right there, is the ultimate takeaway. Being right on direction is just the price of admission to the game. Winning in options means being right about everything else, too. It's about moving from a one-dimensional guess to a multidimensional strategy. And that single shift is what separates a frustrated gambler from a profitable trader.
Secure your edge. Click subscribe to master the professional side of the trade.